Kamala Harris's policy positions span a wide range of issues, including healthcare, criminal justice reform, and climate change. Evaluating her past statements and legislative actions provides insight into her potential approach as president. Her stance on these key issues could reflect her approach and attitude to financial systems. Kamala Harris's support for stronger regulatory measures for cryptocurrencies could significantly impact the market. Her stance aligns with broader democratic priorities to address concerns about fraud, market manipulation, and financial stability associated with crypto assets. Potential regulation could include more stringent Know Your Customer (KYC) and anti-money laundering (AML) requirements, which could increase operational costs for crypto businesses and decrease market liquidity. Harris's advocacy for improved tax compliance and closing tax loopholes could lead to increased scrutiny and enforcement related to cryptocurrency transactions. This could result in more rigorous tax reporting requirements, potentially discouraging some investors and affecting market participation. The Biden administration, which Kamala Harris is a part of, has shown interest in addressing the environmental impact of cryptocurrency mining, particularly Bitcoin. Policies aimed at reducing carbon footprints could impact mining operations, potentially decreasing market supply and affecting prices. Increased regulatory burdens could lead to short-term market volatility as investors react to new compliance requirements and uncertainties. In the long term, clearer regulations might stabilize the market by reducing illegal activities and increasing investor confidence, though initial disruptions could be significant. Enhanced taxation and reporting requirements could lead to decreased liquidity and investor hesitancy, particularly among smaller investors. While initial disruptions might occur, clearer tax guidelines could eventually foster a more robust and transparent market environment. If stricter environmental regulations are implemented, particularly those affecting energy-intensive mining operations, there could be immediate effects on Bitcoin's market dynamics and mining economics. The shift towards more sustainable practices could attract institutional investors focused on ESG or environmental, social, and governance criteria, potentially stabilizing and even boosting the market over time. Financial institutions may face higher compliance costs due to increased regulatory scrutiny, leading to short-term market uncertainty and potential declines in stock prices of affected financial firms. Over time, stricter regulations could lead to a more stable financial system, but transitional periods may involve market disruptions. Depending on her fiscal policies, there could be short-term market volatility. For instance, large-scale fiscal stimulus could initially boost markets, while concerns over increased government debt might create longer-term uncertainty. Effective fiscal policies could support economic growth and market stability, but significant tax increases or regulatory changes could dampen investment and economic activity in the long term. Immediate costs associated with implementing new environmental regulations could affect industries reliant on fossil fuels, potentially leading to market volatility in those sectors. The cryptocurrency market could experience heightened volatility due to regulatory changes and market sentiment shifts. However, a focus on blockchain technology and digital currencies might offer new investment opportunities. For the longer vision, a focus on green energy and sustainability could drive growth in new sectors and technologies, potentially creating long-term investment opportunities and stabilizing the broader market. Both traditional financial markets and the cryptocurrency sector will need to adapt to these changes, balancing regulatory compliance with innovation to thrive in a dynamic economic landscape. Regulatory uncertainties could increase market volatility in the short term, with potential fluctuations in cryptocurrency prices by 5 to 15% in response to significant regulatory announcements. A potential reduction in market participation due to increased compliance costs could impact market capitalization. For example, if compliance costs increase operational costs by 10%, this could reduce market liquidity and potentially decrease market capitalization by a similar percentage, depending on investor sentiment and regulatory specifics. Financial sector stocks might experience short-term declines of 3 to 7% in response to increased regulatory costs. However, over a longer horizon, market stabilization could occur as regulations are implemented and the economic impact becomes clearer. Increased fiscal spending could lead to higher government bond yields due to increased supply and potential inflationary pressures, with short-term yield increases of 10–20 basis points possible. Kamala Harris's presidency may bring several challenges to the cryptocurrency and financial markets, such as increased regulation, higher compliance costs, and potential market volatility. However, clear and consistent policies could also foster long-term stability and growth. Investors and market participants should stay adaptable, keep a close eye on policy developments, and weigh both short-term disruptions and long-term opportunities as the political landscape changes.